Hello and welcome along to the industry analysis for the strategic case study of February 2019. Here we're going to be looking at the real-world wearable technology industry, broadly speaking, but focusing in particular on two segments within that industry. We're going to be looking at fitness tracking devices and looking as well at smart watches and seeing how they compare and contrast, because these are really the two major segments within this industry and they're the most important ones from the point of view of the pre-scene. So before we get into the details of the industry analysis itself, let me just give you a quick overview of what we'll be covering. So in the first section, we're going to focus primarily on numbers, quantities, or industry macro trends, as I call them here. We're going to be looking at growth projections and again focusing on those two major segments and looking as well at customer behaviors and at demographic numbers that are relevant to these two segments. From there, then we'll move into the competitive environment. We're going to be looking at various features and important aspects of the different kinds of technology within this sector. We'll be looking at pricing differences as well and ways that companies are differentiating themselves from rivals within the market, broadly speaking. Then we'll move into section 3 and we're going to look at a number of issues pertaining to supply. Supply is a very interesting and important issue within this sector, and for a number of reasons there have been a lot of news stories and controversies indeed surrounding the issue of supply within this industry, and we'll be looking at why those have arisen and why they might be relevant for the pre-scene in particular. And then in section 4, the final section, we will be looking at various opportunities and threats within this industry based on everything that we've been looking at in the previous sections and draw out some lessons and implications for a company like Vita that we have dealt with in the pre-scene. So let's start with those important figures and look at these industry macro trends. So we're going to start out broad as possible and work our way in then towards the more important segments within this industry. And I think it's important to think of this industry as kind of sitting within the overall fitness industry. And that comprises a whole load of different kinds of products and services, including things like gyms and fitness programs and fitness applications and everything included within that industry. And it's good to get a sense of where that industry has been going over recent decades and indeed recent years. You can see here, unsurprisingly perhaps, and this is looking in particular at the United States market, but this is being reflected in the global market as well. Huge growth figures over the last 50 to 60 years in the fitness industry, broadly construed. We've seen major advances in the area of fitness from a technological point of view, but also from the point of view of consumer information and knowledge and awareness. And this has, of course, spiked the demand for services and products related to fitness. And so it's moving in an increasingly healthy direction, no pun intended, and the growth rates look like they're only going to continue in that very positive trend for the coming decades. So it really is a growth industry, very broadly speaking, and there's a huge amount of potential, especially in those developing markets and developing countries in places like China and India, as they move into the middle class segments, and as this middle class in those countries starts to grow significantly, there's going to be more disposable income, and undoubtedly a significant percentage of that disposable income is going to be spent increasingly on fitness services and products. Here's a more recent look at global health and fitness trends. And as unsurprisingly, as you can see here in this chart, around 2008, 2009, there was a little bit of a flattening off in this general historical growth trend, unsurprisingly due to that global economic and financial crisis of around that time. But since around 2010, we have seen a rebound in the market, and things are looking very positive indeed in more recent years as we move through to the middle of the current decade. So that looks like it's going to continue, assuming there are no major economic crises on the horizon, touch wood. And as we move then into the more segmented areas of this industry. We're looking here at the fitness tracker growth. We've actually seen relatively modest growth in this segment, it has to be said, in the more recent years after initial very positive growth around the start of this decade. So from the years around 2012, 13 and 14, we saw very positive growth numbers for fitness tracker device sales around the world. But since then, since around 2016, 17, 18, we've seen much more modest growth figures. And the projections are positive, but again, has to be said, relatively speaking, the growth, compound annual growth rates up until around the 2020s, it's looking quite modest for the fitness tracker device sales revenues. And we'll see why that's the case as we move through this industry analysis. If you've read the pre-scene already, you'll have seen some clues as to why that is the case. And the major factor is the relative growth of the smartwatch segment. So here we're looking at smartwatch growth from 2014 through to 2018, and you can see in terms of the year-on-year growth rate, it is significantly more positive than the fitness tracker devices specifically. So you can see there 2014, 2015 and 16 indeed were huge jumps, and it's looking like it's going to be almost as big from 2017 to 2018. So really impressive growth in sales figures for smartwatch devices, and that will have, as we'll see, very important implications for fitness tracking devices particularly. Here we're looking at relative shares and growth figures for the different segments within the wearables industry, broadly speaking. So wearables covers things like smartwatches, fitness bands and other activity trackers, and then other wearable devices, and indeed things like wearable clothing as well. So you can see here, in terms of overall share, the rest of the wearables market is relatively small. Then we've got fitness bands and activity trackers still in absolute terms are the dominant segment. But in terms of growth, smartwatches are certainly the ones to keep an eye on. And it's looking like that's going to continue right into the start of the next decade. So that's the big mover, is the smartwatches. And there's a lot of pressure then as a result on the fitness bands, the more traditional fitness trackers that are exclusively focused on the fitness side of things. And as we'll see, this is a big potential problem for that particular segment. So from 2014, you can see the jump was absolutely massive in terms of fitness bands and smartwatches gained significant ground there on fitness bands. And it looks like that's going to be the trend that continues over the coming years. Here we're looking at share of the top 5 wearable vendors or companies within this wearable tech industry, broadly speaking. This is smartwatch manufacturers and indeed fitness trackers or traditional fitness activity wrist devices. And it looks like Apple is making a huge move in this sector. They've gone from 14.4% in Q4 of 2016, jumping up to 21% of the market share for Q4 2017. Correspondingly then, you've got these fitness tracker devices, wrist devices from companies like Fitbit, Xiaomi and Garmin. These have fallen relatively speaking. These are companies that traditionally have focused almost exclusively on fitness tracking devices, and you can see they're all moving in the wrong direction in terms of market share. Fitbit there being the major mover, major player within that segment. They've dropped from 18.5% share, which was the majority share before in 2016, down to 14.2%. That places them approximately 7% behind Apple just within the space of 1 year. That's a huge shift. And then you can see for Xiaomi and Garmin also negative numbers, although a little bit less so, less of a dramatic fall there. So from Fitbit's point of view, really worrying times in this real world industry context. Huawei then, which is a smartphone producer, they've moved also into the smartwatch segment. And although their absolute share was quite modest, their growth figures are as well very positive indeed. So this is worrying times for the traditional fitness tracking devices segment within this industry, and very promising times from a growth perspective at least for the smartwatch producers. And indeed for Apple, in terms of absolute numbers, market share, they are really in a good position. So you can see just how dramatic those rises and falls in relative terms are, and that seems to reflect a kind of seismic shift within this wearable tech industry. Broadly speaking, the smartwatches are putting a huge squeeze on the rest of the wearables market. Here we're looking at some interesting consumer-related figures and demographics. This is very interesting from the marketing point of view, and this is the US context, but you can expect to see similar kinds of trends reflected in developed nations and Western Europe as well. So here you can see on the left, we're looking at the gender breakdown of US wearable ownership. So this is the number of people, or percentage I should say, of people who own wearable devices. And you can see there for the smartwatches, very interestingly, there's 70% share for men and only around 30% for women. Whereas when it comes to those traditional fitness trackers, the opposite is the case. Women have the majority of the share, over 50%, and then men approximately 45% of that particular segment. So that's really important, again, from that marketing perspective. What does that tell us about the consumers and users of these technologies, of the fitness trackers? And given that the smartwatch is the major growth segment, what does that tell fitness tracker producers about how they can tap into that market, what they need to do, considering the fact that the smartwatch is the major growth segment within the industry? And there might be something that they're doing right, that, for example, those companies in the fitness tracker device segment can learn from and incorporate into their own production or marketing strategies. Then we move on to age here. Again, some very telling statistics here. The major age bracket for smartwatches is 25 to 34, you can see there. And on the other hand, for fitness trackers, a much older segment, we're looking at 35 to 54. So there is actually a big generational difference there. Smartwatches seem to be more the interest of younger segments, 18 to 24 and 25 to 34, whereas the fitness trackers appear to be much more popular among adults aged 35 and over. Again, that has big marketing implications, and it raises questions from a strategic point of view as to what these fitness tracking devices companies can do to really squeeze back against the smartwatch manufacturers and try and steal some of that share from the younger age groups and younger demographics. And finally then, again, a really, really interesting piece of information here on the right. We're looking at the income breakdown of people who own smartwatches versus people who own fitness trackers. Now, this is kind of a counterintuitive statistic, and it's going to be very important to try and interpret this and to consider what the implications are, especially when we look at the pricing of products within this industry. So here we've got, again, smartwatch in blue, and then you have the fitness tracker in green. And for the smartwatch segment, the majority of consumers of smartwatches or owners of smartwatches earn less than $45,000 a year, whereas the fitness tracker device owners are actually, most of them, coming from 100,000 plus per year. So what does that tell us about these different segments? What does it tell us about marketing strategy? What does it tell us about their priorities? About their style preferences, for example, or their fashion preferences? Is this something, for example, to do with the fact that people who buy watches with higher incomes tend to purchase them for style or for prestige more, and that people who are buying these smartwatches are more interested just in the tech side of things, they're more into gadgets perhaps? And again, that's just a reflection of the fact that it appeals to a younger generation who want to have the latest technology. They're more up to speed on the latest technology, and perhaps for that reason, that's why they tend to earn less. Of course, people who are older tend to earn more, tend to have higher salaries. So it may well just be a residual effect of the fact that most fitness tracking device consumers come from those older age brackets, and older age groups tend to have higher earning power. But it's hard to tell. It may have something more to do with the fact that higher income people tend to have watches for their watches will be for one thing, and then their fitness trackers will be for another thing, and they'll only use the fitness trackers when they're exercising, and they'll take them off and then put on their more expensive, high prestige watches when, for example, they're going about their daily business. Whereas on the other hand, the smartwatch, considering that it incorporates a number of different functions, it may well be given that it's multi-purpose. For that reason, it appeals more to the lower income brackets. They can wear it all the time, they don't have to change, and they're not too interested in buying those prestige watches like Rolex and all those other brands and labels. And so that's something to think about. Again, from a marketing and strategic point of view, these could be very, very telling and consequential figures. So this raises an interesting question from a competitive point of view. To what extent are these two different segments aiming at different target markets and different consumers? Are they mutually exclusive, or are we looking at the smartwatch producers squeezing the traditional fitness tracking devices more and more as the years go by? So there's a bit of a debate raging within this industry about whether or not there really are in direct competition, whether or not those traditional fitness tracking devices can kind of protect and maintain and secure the segments and the demographics that they already have a majority in. So this is an interesting report from CNBC, and you can see here they address this exact question. So they start, are you on team fitness tracker or team smartwatch? So this is a common kind of trope within this industry. People are generally aware of the fact that you're either one or the other. You either have a smartwatch or you have a dedicated fitness tracking device. So in the battle between the two wearable technologies, it turns out there may not be much of a competition after all. According to a new report by market research firm NPD Group, 36% of people who own fitness trackers in the US are 35 to 54 years old and are predominantly women. In contrast, more than 2/3 of smartwatch owners are male and between the ages of 18 and 34. So completely different demographics there. And as we saw before, there's also a divide between the average income of each device's owners. According to MPD, 41% of fitness tracker owners have an average income of more than $100,000, while nearly half of smartwatch owners earn less than $45,000. So are they dealing with different market segments? It has to be borne in mind that this was an article from 2015, so we're on 3 years from this article, and it, based on the figures that we saw earlier, it does seem to be the case that smartwatches are encroaching on this territory more and more, considering, for example, the market share of Apple within this wearable tech industry overall. It does certainly seem that they are putting the squeeze on these fitness tracking devices companies, and it's evident that they're not able to entirely hold on to that segment. They're not able to completely protect that predominantly female 35 to 54-year-old 100,000 plus market. There is more and more of that going to those smartwatches. So they're losing this battle, it seems, overall, and they have to really think hard about what their next steps are going to be in response to this encroachment from smartwatch manufacturers.